How do you link your economic view at Pantheon into our belief in corporate earnings, the mystery that's out there of how corporations will do?
Yeah, I'm kind of worried about corporate earnings. I think there's a sort of perfect storm-ette coming with slower growth.
Storm-ette?
A storm-ette. We're not talking 2008.
Was Leicester a storm-ette for Newcastle United this weekend?
No, that was a full-blown hurricane.
Full-blown hurricane. Hurricane Leicester.
A richly deserved full-blown hurricane. Yeah. Yes. So the storm-ette, slower growth, is a top-line squeeze on corporates. Plus, pickup in wage growth, not going crazy, but certainly picking up, and there's a squeeze on margins. Plus, of course, tariff pressure, which requires some margin compression. Plus, I also think the Fed isn't going to be as easy as markets think, so there's maybe a valuation risk for stocks as well. So you put it all together, you've got a much less favorable earnings environment. Of course, coming off of 2018, when S&P earnings were up more than 20%, that was never going to happen this year because, of course, last year was boosted by the tax cuts. But the slowdown, I think, is looking to me more or less endless. I don't really see a recovery in earnings in the foreseeable future. And coupled with the uncertainty from the trade war, that strikes me as kind of pretty toxic.
Ian, so just to take a step back, what are you actually expecting the Fed to do? An insurance cut in December, or you think that even that is overblown?
I think even that's a bit overblown. I'm not saying that they can't do it or that it's out of the question, but I would say at this point it's maybe a 30-40% probability. The issue really is that although growth is weakening, it isn't rolling over at this point, I hope. And I'm also concerned that I think that the inflation pass-through that we'll see from the consumer goods tariffs is likely to be bigger than the Fed expects. Because right now their inflation forecast shows no change between the end of this year and the end of next year, even though we've got these consumer goods tariffs that haven't even begun to work through yet. So I think they may be underestimating a bit of inflation risk, and the growth numbers won't be absolutely terrible, so maybe they should hold fire for a little bit longer. I don't think the case is very compelling, and clearly their committee is completely split down the middle internally as well.